Hey guys, how are we doing? It's Cryptoinsightuk here, bringing you back another video. I'm just going to jump straight into it, and I want to talk about the DXY. I've been writing about this for weeks, like literally weeks and weeks, in fact, even months to years. But the last few weeks, it's really been basically keeping me on my toes. Am I an idiot? Is everything I'm writing about wrong? Like, these are the things that I'm trying to work out, and I'm trying to make this video to try and find some truth. I'd love for you guys to comment below if you know more than me. I'm just going to get into some of the things that I see and some of the things that I know, and just discuss like what potentially could be happening here. So let's just start with the fact that the DXY is actually, we're on the weekly time frame here. We're actually forming the 10th consecutive green week for the DXY. Actually, I feel like it's longer than that. So if we just count, I think I'm probably not drawing that right. 11th consecutive green week. The last time we saw anything like this was back in here, which is 2013, 2014. But let's just get back to it. Probability would tell us that at some point we see some sort of retracement red candle. Whether that's just wishful thinking, I don't know. But I want to get into a few other things. So we take the DXY now to the daily time frame. It's broken structure in regards to recent swing highs. I was personally looking for a lower high to be formed here and a continuation to the downside. I'm going to show you some drawings in a second. But some things that I do want to bring your attention to before we look at that is we're overbought for the DXY here. And the last time we were overbought in this section was literally the Pico top back in September of 2022. So if you read my newsletter, you will definitely recognize this. The last thing that I'm really, like my last roll of the dice, I guess, is the fact that this could be manipulation. As we got manipulated outside of this range that we created here back in December, we got manipulated to the downside, bounced back up. Now could we be getting manipulated to the upside to trap some balls in before we continue for a downside break? We've got a few things that could come in confluence with this, but also we have some contrasting charts to look at as well. We're going to get into them in 1 second. So what I'm actually looking for here is for this to reject inside this manipulation box if my thesis is right. Like this, as I said in my last throw of the dice, I've been calling for lower highs. We didn't get them, we broke out. We've broken above the distribution range, which is potentially distribution, obviously, not until this isn't confirmed unless we get this manipulation. If we continue to soar out of here like I'm wrong and I'm going to have to reassess. This is why I'm making this video, because I just want to speak to you guys about what I see and why I see it. If you think that I'm wrong, that's fair. I want to know why, because I want to understand a bit more deeply. Is there something that I'm missing? So what we're going to next look at is the euro and the pound. We're going to look at the euro on the daily. And today, to be fair, so far, it looks like they are actually bouncing. The thing that I was going to point out is that they're actually, the euro is like 48% of the DXY basket, and currently, or 58%, one of the two, sorry, I can't remember off the top of my head. But it's currently super oversold on the daily time frame, as oversold as we were exactly at the bottom back in September. We literally came down to a little bit lower than that. So is that another sign on the daily time frame we're going to have some sort of bounce for the euro? If we look at the pound, it's very similar, right where the bottom was. We're about as oversold as we were back then. So, but again, today looks to be taking a bounce. So it might be the right day to make this video, or the wrong day, like we'll see how things turn out. So and the pound is about, I think, 16 or 18% of the DXY. So between the euro and the pound, it comes to about 72% from as far as what I remember. So maybe the pound's 14% and the euro itself is like 58%, something like that. But okay, let's have a look at what else could be going on. I want to look at the 2-year and 5-year treasury bonds. Like, these things are ripping, and when I say ripping, I mean like these things are super high. I'm going to show you on the weekly. This is the 10-year treasuries. Let me just show you actually how high these things are. We haven't been this high since literally the financial crash, which was here 2008. So this is definitely something to watch for. If we break above like the 5.25% level, I just think there's nothing really stopping US treasuries. This is happening because we've got countries selling bonds off, which I'm going to touch on in a second. We saw a little clip yesterday from Real Vision. I want to touch on that. I thought it was really important. I want to also say that basically the way that I understand that bonds work is you are loaning money to the government and they then give it you back after the allotted period of time with the percentage of interest that the bond has on it. So for example, in this specific example now, if you bought a 10-year treasury, you would be lending your money to the government for 10 years, and after 10 years, they give you 4.67% back. And if you held a 2-year treasury, which look at the state of this, given an absolute V bottom out there, and going to break its recent highs, which it has done in the last few days. If you hold a 2-year treasury, you give them your money for 2 years, they give you 0.13% back. Basically, the higher these percentages go, the less people want the promise of a return from their money. And this is supposed to be one of the safest investments in the world. So this is basically showing that there's like a lack of faith in the dollar longer term, the higher these rates go. It basically means people think that they can very easily make more than 5% on their money outside of just sitting with it in US dollars. So it's bearish for the dollar or the USA in general, as far as I understand. So when people say they're selling bonds, that actually means the opposite of what it might look like in this chart. So as they sell bonds, the percentages for the bond go up because there's less demand. And let's watch this little clip from Real Vision, and we're going to get back into this because I want to just talk about a few other things.
You know, this is tough for me. I don't know if you ever saw the movie Training Day, where it was Ethan Hawke.
Denzel Washington
sits down at the table, and they asked him if he's ever had his shit pushed in. Right, like that's what it's like for me right now. It's been pretty miserable. So
why is that though? Give us the context. Why is it miserable? Because you've been thinking something else was going to happen?
So I started getting bullish on bonds like 50 basis points ago, like around 4%. Well, 10-year notes anyway. We have some structural issues which are not going to get better anytime soon. Okay, we have deficits which are not going to get better anytime soon. And we have, ostensibly we have China selling and other foreign governments selling, which is adding to the pressure. As a trader, when I watch a chart intraday, I look at the price action. I look how it behaves. And when I was watching tens yesterday, not today, but yesterday, it was one of the most miserable days in terms of price action I have ever seen. So I think that, I know that the data is getting worse every single day. The data today was terrible. Richmond Fed was bad. Consumer confidence was bad. Expectations was bad. New home sales was bad. And none of it matters. Absolutely none of it matters. And it reminds me a lot of when I was at Lehman in like 06, 07, and the housing market was rolling over and we were heading into a recession. And the markets just did not care, and nothing mattered until it mattered. The first day that it mattered in 2007 was February 27th, and we walked in that morning, and the ABX was gapping down 10 points. And the VIX went from 10 to 19 or something like that. Stocks were down 3% in a day, and bonds were up 2%. And that was really the first day that it mattered. So what's interesting is, we have a pretty low volatility environment. The VIX is 18 or 19. We still do have that complacency. And I don't know what it's going to take to sort of shake us out of this, whether it's some shock payroll number that's terrible, or a CPI number, or one of these big headline economic numbers, or something else. But, until then, the only day that bonds don't go down is Columbus Day, which is because the bond market is closed. So,
So that's a great clip there from Daily Dirt Nat on Real Vision. He's basically saying that he can't see the end for the selling of bonds, so percentage is going to keep increasing. This is bad news for like the Fed and basically anyone creating monetary policy in the US. I personally believe that the DXY is going to come down. But just quickly, on the 2-year, if we just look at this little divergence here, this bearish divergence, we've got the RSI losing strength and actually gaining higher highs on a prolonged period, like since February of this year. This shows that we're looking for a breakdown in percentages. And how do we get to these percentages? As we've got experts saying that they don't see any other way than for bonds to keep selling off, so percentages to keep going up. My thesis is that for some reason we will see the US government step in and print a shitload of money and buy back bonds. Or for some reason they will print money. If they print money, likelihood is people will buy bonds because they will have less strength in the DXY and the dollar, and then the percentages will come down. Or they'll just straight up buy bonds themselves. But what we've seen with Japan, if you start to control the yield curve, which is essentially that's what buying bonds back is doing, then you will sacrifice the strength of your own currency. So something we've got that contrasts this obviously is stocks, and I'm going to have a quick look at stocks right now. By stocks obviously mean equities, and let's have a little look. And the reason why I talk about this is because if we just go zoomed in on the old S&P, we lost our recent higher lows, but one thing we have done, which is actually quite bullish in my opinion, is close this gap here. So we could have been looking for that gap closure before we start to move up, but we have broken structure and lost the higher low structure here. If we look on the Dow Jones, we've lost the higher low on the Dow Jones as well, just creep below it. So this contrasts the opinion that the DXY might come down, because this is showing that stocks and shares might come down, which often happens in an inverse correlation with the DXY, meaning that stocks and shares normally come down when the DXY goes up and vice versa. However, if we look again at where the RSI is on the daily for the Dow Jones, for example, it's very, very nearly in this oversold area. The last few times we were down here, we saw a bounce, we saw a bounce, we saw a bounce potentially coming out now. So is that in confidence with my thought that DXY might come down, or because of the structural losses, are we going to see stocks and shares come down? This is where I really do feel a bit stuck, because I thought this was going to happen a few weeks ago, if not longer than that, but it's continued to make me look like an idiot. I've written about it every week in the newsletter saying I think it's coming down, I think it's coming down, I think it's coming down, continues to grind upwards. Another thing I'd just like to look at is gold. On the daily time frame, again, gold is very, very nearly in the oversold area. The last time we were here, we had a little bounce there. The last time before that, we had a big bounce. Before that, it was literally the bottom. So a lot of things are pointing here to say that they could bounce, and these are things that often move opposite to what the DXY does, and the DXY looks overbought. So the DXY looks like technically it could come down, and everything else around it looks technically like it's going to go up. This is what I've been looking at for weeks, genuinely, and I just haven't had the turn yet. So I don't know if I'm missing something big, or if the DXY is absolutely just going to kaplunk. They're the things that I think could happen here. Or the DXY just chops sideways for a little bit, resets the indicators on everything, basically everything cools off or goes sideways, and then the DXY continues. That's another potential scenario, but I honestly think the DXY is going to kaplunk unless I've missed something. I want to show one other thing on gold, which I don't know if it's good or bad. I actually noticed this today when I was just looking. I'm going to get my drawings out. Look, gold could be in a huge cup and saucer pattern on the weekly time frame, which would take us all the way out to like towards $4,000 for gold if we get a breakout from this pattern. What does that mean for economies? Does that go in confluence with the fact that stocks might come down? Gold often is a store of value where people are scared of both equities but also cash, and they put their money into gold as a store of value. Is that potentially what could happen if we see a breakout of this pattern? Am I misreading something? Am I missing something in the tea leaves? I personally believe the DXY will come down because at some point something's going to break in some sort of in either the economy, or there's going to be some issues and they're going to have to print money, and then the DXY is going to come down because that's going to weaken the DXY, and then equities and things like crypto will rally heavily, maybe gold will rally as well, but normally gold rallies when equities come down as well. So this is another thing that you need to take into that picture. And finally, Bitcoin is really, really interesting to me right now. I know there's a doom and gloom in the market and market sentiment, everyone's flipping, crying, throwing shit at each other, whatever, just right above the noise. Actually, look what crypto's doing, look what Bitcoin's doing. We've got all this happening, we've got stocks losing their structural higher lows. Bitcoin hasn't done that. Bitcoin sat here nicely on top of a range for weeks. Yes, it's felt absolutely horrible, but it's just a feeling. Structurally, Bitcoin's not done anything wrong. There's no break of structure or anything here for Bitcoin. So I'm actually quite interested in what Bitcoin might be doing and why it's potentially an outlier, aside from what the DXY is doing and what stocks are doing. DXY has been ripping. Bitcoin's just chopped, basically. DXY's ripped all these weeks. Yes, obviously it came down in value here, but it's just chopped for like 6-7 weeks, and while the DXY has been absolutely pushing. That really interests me for Bitcoin, and I genuinely think we're setting up for a big move. I've been saying that for a little while as well. I thought we'd see all-time highs for Bitcoin at the end of the year. That's still not out of the question for me. I know that might seem like madness to some people, but we've still got October, November and December where we could see a big push here, especially if we see something like a Bitcoin ETF. I will look so much less crazy if we get something like that, and everyone's going to go, oh, but we had a Bitcoin ETF, and I'm going to say, well, I thought something was coming, and I was telling you this, that the charts were saying this, but you guys just want to wait for the narrative, listen to everyone saying it's doomtown, and basically call me an idiot, and I will be called an idiot, and I'll take it at the end of the year if we're nowhere near all-time highs, or if we reverse down to lows. Fair enough, I'll put my hands up and say, look, I was wrong. This is what the charts are telling me. I drew this out earlier. I think Bitcoin could be in an extended V-bottom structure. Basically, a V-bottom is where you come down, bounce, and come straight out again. A great example of that is like the S&P 500 in the C19 crisis. In an extended V-bottom, you come down below the neckline, so you can see a nice neckline's formed here. I'm just going to take the drawings off. You can see a neckline's formed here because it's where price bounced on the way down, and then it got stuck there on the way back up, and then we bounced and got through it with this candle here. So the nice neckline's drawn in there. We've come down, we've bounced out above the neckline, and the reason it's an extended V-bottom formation is because we've started to create a range on top of the neckline as support, and then once we break out of this range, that's when we'll go towards the target of $43 or $43,258. If I've drawn it in my target correctly, it's basically the distance between the neckline and the trough of the V, and extended that on top of the neckline to give you that target. Could we see that? Potentially. I actually do think, as I said, that we were going to rally higher than that, but that's the technical breakout target. So I just wanted to compile all my thoughts into one little video for you guys. It ended up being much longer than I thought it was going to be because I just wanted to get down some of my thoughts. I want to know if you guys think I've missed anything, if you guys think I'm missing the point completely here, or if you guys think I could be onto something. I really think the DXY is coming down, but I would love to know what I'm missing and why it potentially hasn't, or whether it's just literally the market manipulating us. I've never felt this unsure in the market myself, so maybe everyone else must be feeling 10 times worse because I sit here and stare at charts all day. So maybe that's exactly what the market should be doing before the DXY reverses and things like Bitcoin rip, or maybe it's just me being a complete idiot, and I'd love to know what you guys think. If you enjoyed the video, please give it a share and comment below, and peace up, A-Town down, and I'll see you in the next one. Thank you.